The next amendment pertains to the alternate investment fund, and here again it belongs to category 1 and category 2. What these categories are we are going to see in the next slide, but first let me take you through the provision. So there could be an investor who could be there in a fund who invests in an AIF or the alternate investment fund, which in turn invests into various companies which are referred to here as the India investments. Now, under the existing provisions of section 10 subsection 23 FB, the income of the venture capital fund or maybe the venture capital company are exempt from tax if they are organized either as a company or as a trust. This is subject to certain conditions that they have to be registered and stuff like that. What the budget has now done is that they have created a special regime which will be applicable to all the venture capital or the alternate investment fund, whether they are organized as a company, trust, or any other form of organization. So what are the changes which are there? From an investor perspective, which is this person, the income of the investor shall be taxable as if they made a direct investment. So you assume that this does not exist. If there was a direct investment from the investor to the India investments, what would be the taxation? The nature of income in the hands of the investor is going to be the same as that of the fund. If the nature of income of the fund is profits and gains of business and profession, then any income which comes to the investor out of this fund will be exempt from tax, and the reason for that is that such income is actually taxable in the hands of the fund. And what are the implications in the hands of the fund? The taxability of income is as under. Please note that it is mandatory for the fund to file their returns. The business income is taxable, so when the fund gets any business income from the investments, that is taxable, that is exempt in the hands of the investor. Non-business income is exempt. So here you can have business income which is exempt, non-business income taxable. Then there's a withholding tax of 10% for income which is exempt from fund, right? So effectively, when the fund makes a payment of the income which is exempt in its hands to the investor, there is a withholding tax of 10% which is exempt from the fund. If the fund has a loss of the fund, carry over and not transfer to the investor. So it may just happen that in any of these years, the fund has some form of loss. While income is being taxed in the hands of the investor as if they had made a direct investment, the losses are that of the fund and they will be carried forward to the next year. There is no applicability of DDT or distributed income tax provision on the fund, and there is no TDS on the fund income which is exempt from tax. So then comes the question, what are these category 1 and category 2 funds? Category 1 funds are the alternative investment fund which invest in startup or early stage ventures or social ventures or SMEs or infrastructure or other sectors or areas which the government or the regulator consider as socially or economically desirable. Category 2 AIFs are the one which are not to category 1 and 3. 3 is not a subject matter of consideration here, so we haven't discussed it, and includes private equity fund or debt fund which do not undertake leverage or borrowing other than to meet their day-to-day operational requirements.